Hey traders, this is Blake Morrow with Trader Summit, and I'm super excited. I have Mr. Mark Yusko. He is the CIO and the founder of Morgan Creek Capital Management. Good to see you, Mark. How are you?
Blake, great to be with you as always. And I look forward to these Trader Summit every year. So excited to be back and excited about what we're going to talk about because it's kind of been a boring year, 2022, don't you think?
Nothing's been going on. Zero.
Nothing.
Just kind of shrugging shoulders. Nothing's happening. It's funny because for me as a predominantly currency trader and analyst, it has been, the volatility's gone off the hooks. But you've seen similar in crypto with events, right?
Yeah. Look, currencies, and cryptocurrencies, part of much of the crypto space is actually cryptocurrencies and cryptocurrency trading. And, it's a funny thing about all currencies is, they don't exist in a vacuum, right? They exist against something else, right? $1 is $1, but we don't talk about dollars in dollars. We talk about dollars in yen or dollars in euro or dollar. Look at the dollar yen this year. I mean, it's gone from 108 to 150 something back to 131 this morning, crashing down as they abandon yield curve control or change yield curve control. But in the crypto space, cryptocurrencies have had a lot of volatility, most of it downside. Bitcoin collapsed down 65% for the year, but not Bitcoin and Bitcoin, right? One Bitcoin equals one Bitcoin. Yeah. But we don't price it in Bitcoin. We price it in dollars. So in dollars, it's down 65%. Interestingly, in Turkish lira, it's up, right? Never been a bear market in Turkey for Bitcoin. Never been a bear market in Venezuela for Bitcoin. Never been a bear market in Argentina, Viva Argentina for the World Cup for Bitcoin. Because in those currencies, because they have dictators, right? Or dictators, are getting trounced. Those currencies get absolutely pummeled. And so another currency is a good store of value against it. So currency trading is a really interesting dynamic, as you know, since that's your livelihood. But and from a trader's perspective, it's really tough to keep all the different crosses in mind. And I love the story this year. The dollar was super strong. Like, was it really? Was it against what? Right? It was strong against the euro and strong against the yen up until recently. In fact, although the yen has strengthened against the dollar more in the last 8 weeks than any time in history, I think is the right stat. Maybe it's 12 weeks, but
yeah, something like that. Yeah.
It's a crazy phenomenon. And I look at the dollar versus the renminbi over the past couple of years, and it's actually down. No, the dollar's strong. Well, I will just argue the dollar is the least weak of the major currencies. It's still toilet paper, swirling down the toilet as they print way too many of these things. And so you look at it versus, well, what about gold? Well, gold has had this interesting dynamic where for years it had been the perfect store of value. And, you look at stocks priced in gold, they're dead flat since 1997. In dollars, they look like, well, up until this year, they look like they were at all-time highs. Yeah. But that's because we price in this depreciating asset. But gold's been flat all year. Yeah, because gold every year for the last few years has been spoofed. JP Morgan paid, this is crazy. They paid $1 billion fine last year for spoofing gold. And they're like, yeah, but we made 20 billion. So it's just the cost of doing business. My head wants to explode, right? When they admit to doing bad stuff and holding the price down. And yet that's okay because, I don't know why it's okay. So that's a kind of meandering answer to what's been going on in the crypto space. Mostly in 2022 was deleveraging, and we can talk about that. And then you had just massive fraud, right? Bad guys doing bad things. And, Sam Bankman-Fried, is he going to get extradited? Is he not going to get extradited? We'll see. But the bottom line is, he didn't really build. He lied about building this thing called FTX, which ostensibly was the second largest crypto exchange in the world. Never was. Just a total fabrication, total lie. And it's really stunning. I mean, you think about it. How I can't hide $10 from my wife in my checking account. How did they hide $9 billion? mean, they had 1 billion in assets, 10 billion in liabilities. How do you perpetuate that lie for so long? And so people are freaking out because FTX blew up, and then there was a bunch of liquidations, and then there was a bunch of people who had relied on honesty, right? People lent money to FTX expecting to get paid back. And FTX is like, well, yeah, we stole it, so you're not getting it back. It's like that South Park thing, and it's gone. So it's gone. And so the lender shut down, first Celsius, then Voyager, then BlockFi, and a couple others. And so that led to more liquidations. And all of that liquidation pressure, led to lower prices of the assets. But interestingly, when you look at the fundamentals of the networks, like network adoption and the number of nodes and the hash power, all those things still continue to do well. So, one of the challenges of markets, and you've been doing this for a long time, as have I, although I have white hair, you don't. You look really good. I still have
I'm half
hair.
Chinese. I'm half Chinese.
But okay, all right, that'll do it. But I think the thing for me is these cycles, they repeat. And people say, history doesn't repeat, it rhymes. No, cycles actually repeat. And so every 4 years we have this, up and down cycle of crypto winter and crypto spring, crypto summer, and crypto fall. And, we had a really bad crypto winter. And now we're kind of in that crypto spring where it's kind of choppy and not making any progress. And sometime early next year, we'll end up back in crypto summer as we anticipate the next halving in early 2024. And I think then it could get exciting again. But boy, in the interim, it's going to be tough.
Yeah, markets. I think about the things that have happened, and there's the parallels are amazing if you draw it back to what happened in the .com era, and we got the crash, and then we got the equity market selling off, but a lot of people do forget that the companies that emerged from that. I mean, there were the Amazons and the Netflixes of the world that did emerge. And if you look at Bitcoin or you look at Ethereum, and I'm sure there's a few other big names that you're more familiar with, they have really sustained well, considering some of the other altcoins that haven't.
Yep.
I still now that poses like another question that I have for you when you're talking about the crypto space, and obviously a lot of retail investors are they got a bad taste in their mouth, but from an institutional point of view, from where you sit, how many opportunities are presented at this point in time now? And then I also wanted to ask you after this, I want to ask you a little bit about regulation, what that might look like for the industry. But let's start off with the opportunities. What do you see out there, like different networks that are looking good to you?
Look, you bring up the great analogy and comp, right, which is 2000 to 2002. And it was exactly like we're going through today. And it was the result of this long-term trend in technology. So technology evolves over a 14-year cycle. Why it's 14 years has to do with kind of the creative class being young people, and it's half a generation. But it's, 1954 was the mainframe, then 68 was the microchip, then 82 was the personal computer, 96 was the internet, 2010 was the mobile net, and 2024, still coming, is the truth net or the blockchain era. And what happened from 96 to 00 was you had this internet thing get created. And people were like, oh, it'll never be more important than the fax machine, according to Paul Krugman. And it's a fad and it'll pass. And the newspapers said it was terrible. And all these companies like Netflix and Amazon, they were horrible. But you had this bull market from 96 to 00. And then we had a crash. And that crash, right, it killed off all the bad stuff. Right? And it was necessary. And so 90% of the bad stuff went away. The art.com, art technology groups, right? They were the company that helped you turn your company into .com. No value, just change the name to .com. And the stock price went up. And there was a thing called Digital Island, which was a little hosting business out in Hawaii. And that was replaced with subsea cables. And so there were a lot of things that needed to go away because we got in a bubble, right? Up to the point recently, the worst bubble in history. And what was interesting is as the bubble popped, the bad companies went away. Pets.com disappeared. Chewy.com today okay, 30 years later, is the same company. It's the exact same company. I mean, 20 years later, I'm sorry, 20 years later, it's the exact same company. It just, we needed GPS tracking, we needed broadband, we needed more penetration of the internet. And so it was ahead of its time. And Webvan, right, is Amazon and Whole Foods today. And Amazon in 01 to 02 went down 94%, right? Everybody remembers that. When was the right time to sell it? Well, not then. That was time to buy, but everybody was running away. And so inevitably we get these cycles. And just like in crypto, so crypto is here to stay, right? Blockchain technology is the next operating system for the Internet of Value. So you and I are using voice over Internet protocol right now to talk and video over Internet protocol. And the incumbents hated that, right? They tried to pass a law in 1996, 97 to stop voice over IP. The telephone companies paid regulators to try to pass a bill. And Al Gore, right? He didn't invent the internet, but he did kill that bill. He said, no, that's stupid. We're not going to stop innovation. And so I give him a lot of credit. And similar what's happening today is the regulators are saying, oh, we got to clamp down on this and all this bad malfeasance. I'm like, how many banks have failed since 1987? A lot, like hundreds and hundreds. How about the global financial crisis? Was that pretty bad? Yeah. Did we stop using banks? No. Did we stop transferring money between banks? No. Did we stop investing in the stock market because it went down a lot? No. So this idea that suddenly this technology is going to go away is silly. Now, are the regulators going to try to beat it down because the incumbents want it to stop, right? The banks are being displaced by blockchain the same way that media and commerce was displaced by the internet. Because if you think about the internet, what is the internet? It made information ubiquitous. It made information bidirectional for the first time. And so you didn't have to watch Happy Days. You'll remember this. Happy Days on Tuesday night at 8 o'clock, right? And Laverne and Shirley at 8:30. You didn't have to sit in your tray, in your chair behind your TV tray, eating your TV dinner, watching Laverne and Shirley, because you can watch it anytime you want now because you can stream it. And so all that market cap that used to own to ABC, NBC, CBS, now it resides at Netflix and other streaming companies. So the same thing's happening to the banks. The banks are seeing assets leave to these alternative forms of financial services because what blockchain does, it replaces trust with truth, right? In the old days, I lent you money and you had to rely on me being trustworthy because I kept a ledger. I had a single entry ledger and I wrote down Blake owes me $100. But I'm an unscrupulous guy, so I wrote down 200. You come back to pay me back 110 next year. And I said, oh, you owe me 220. No way, I only borrowed 100. Says right here in the ledger. So the Medicis, 1,200 years ago, came along and said, no, that's a bad system because we don't trust Mark. So Blake, you keep a ledger. Mark, you keep a ledger. And we, the benevolent Medicis, for a small fee, will decide that the ledgers match and what's the right number. So we will be the trusted third party to establish truth. So I lend you $100. You come back. I wrote down 200. I paid off the Medicis to say that my number's right. You owe me $200. So it can still be messed up. And, banks have paid $360 billion of fines for bribery, money laundering, all kinds of malfeasance, because it turns out you can't trust everybody all the time. So what blockchain does is it replaces trust with truth. So if I want to send you money today, you have to have a bank account. I have to have a bank account. I send you the money. And they charge a fee. Well, wait a second. Why do we trust them, right? I have this recurring nightmare, Blake. I go to the ATM, I punch in my code, and it says 0. Like, how would I prove it's not 0? I don't have any statements. I haven't had a statement in 10 years. And it's their word against mine. They're bigger, more trustworthy, right? So people say, Mark has no money. So I send you the money, and there's no money there. Bank of America took it. So, and I'm not saying they did take it, but they could. So with blockchain, and Bitcoin in particular, right? I have a Bitcoin. The network says thumbs up. Mark has a Bitcoin. Okay. No banks, no third parties, just the network, the algorithm. Okay. I send it to you. You've got it. Network says, yep, that happened. Okay. Now you've got it. It's Blake's irreversible, immutable, permanent truth. It's truth that Bitcoin went from me to you. And it's on a public ledger, immutable record for everyone to see forever and ever. I can't take it back. I can't say, oh, I didn't mean to do that. Oh, Blake fooled me, whatever. That transaction happened. And so by replacing trust with truth, we take $7 trillion $7 trillion. That's a big number, right? $7 trillion of waste that goes into bank fees, overdraft fees, transfer fees, custodial fees, accounting fees, auditing fees. Think about this. If you and I were a bank and we made a loan, and then a hedge fund wanted to buy that loan from us, it would take them 30 days to settle that bank loan. Because there are 7 different computer systems, one written in COBOL, one written in Fortran, one written in C++, and one in Java, that all have to talk to each other and reconcile. And you got to pay a bunch of fees to finally get the fact that, yep, Bank of Mark and Blake did this loan, and that, whatever hedge fund, Perry Partners, decided to buy it. So that's crazy. That should happen instantaneously. If I want to sell you a share of stock, well, one, I should actually own the stock. Like my stock right now, it's not mine. It's UBS's. It's in UBS's name. I have an IOU to UBS. And if I sell it to you at Merrill Lynch now owns it. UBS doesn't own it. It sits at DTCC in a file drawer. You have a claim from Merrill Lynch, which is like your money in the bank. It's not your money. It's the bank's money. You have a claim, an IOU, that is good most of the time. But what happens if UBS goes out of business? Well, then you got to stand in line and try to get your money back or your shares back. So all of this goes to saying, what do we like? We like infrastructure, right? We like the exchanges. We like the software. We like the tools. So we have a fund that invests in the companies, right? So we've invested in 70 different companies. The most exciting one right now is actually a physical hardware company called Ledger. And they make, I believe, the iPhone of the TruthNet, which is they make a wallet, a hardware wallet that will allow you to store your crypto securely. And they custody 20% of all the crypto in the world. Great company out of France. And they just released a version that looks and feels like an iPhone. So if you think about the browser made the internet ubiquitous. Before the browser, the internet was a pain in the neck. Remember the AOL, kind of dial-up modem, just horrible experience, right? You couldn't download a movie. It took 4 days to download a movie, so no one would ever do it. So Netflix almost went bankrupt. And you needed broadband, and then you needed better communication technology. So we've made those strides, and then this came along in 2007, and people said, "I'm not paying $500 for a phone," and stock price went down 40% in a week. Apple went down 40% because people said, "I will never own a smartphone." Well, yes, now you own 2 smartphones and you don't pay $500, you pay $1,500. So the key is that functionality is what everybody demands. And the same thing with a hardware wallet, you're going to want to have pure security of this, because they are bearer assets, which is one unique thing about crypto. It's a little bit back to the future in terms of coins and currencies and bearer assets. So they got to be safer. So you can't do it on a phone, which can be hacked and SIM swapped and steal all your crypto. So this browser moment of, I think, Ledger announcing their new thing called the stacks, I think is pretty cool. So lastly, I'll say that still pretty excited about Bitcoin. It's the future of money. It is a better form of money. Money is an asset that exists in the absence of a liability. Gold is the only money in the world. Everything else is credit. It's currency. It's backed by debt. And we're going to see how bad that is going forward in the next couple of years as debt prices get whacked because of interest rates. And so ultimately, Bitcoin is a better form of gold, digital gold, because it's lighter weight and easier. Like if I had a bar of gold here and I wanted to break it in half and give you half of it. Well, first of all, I couldn't break it in half. I think I'm a strong guy, but I'm not that strong. And then I couldn't stuff it in my computer and send it to you, right? It just doesn't physically do that. If I have a Bitcoin, I can break it in half and I can send it to you instantaneously. And I can do it down to 1 Satoshi, 1/100 millionth of a Bitcoin. So that portability, that lightweight, and ultimately central banks will own it the same way they own gold, and it will be the base layer of money. Ethereum, kind of like the www dot of the internet. So if you think about the internet, there are 5 protocols that we use. You can't own them, but we use them every day. TCP/IP, which is the base layer. Actually, IP is the base layer. TCP/IP trust transfer protocol sits on top of that. And transfer control protocol, not trust, transfer control protocol. Then on top of that is file, is not Filecoin, but file, what am I thinking of? FTP, file transfer protocol, and allows you to transfer files. Then you have HTTP for websites, SMTP for email, and www. That ties it all together. In the future, there's three possible futures, Blake. One is Bitcoin. Bitcoin is the base layer, like TCP/IP. Then there's Lightning on top of that. Then there's L3, L4, and something on top, and it all is Bitcoin. Certainly possible. One blockchain to rule the world. Certainly possible. Or we have Bitcoin as a base, Filecoin to transfer files and store files. Then we have something in the middle, like Cosmos or Polkadot or Avalanche or Solana in the middle, and then www. Which is Ethereum. Or the third kind of mental model is a bunch of L1s, Bitcoin, Ethereum, Solana, Avalanche, with bridges across them so that you can transfer value seamlessly and easily. So again, long answer, but it's the most exciting technology I've seen in my career. It's the greatest wealth creation opportunity I think I will see in my lifetime. And we're just getting started. And yes, this FTX thing is a setback, but it's not as bad as Mt. Gox in 2014, right? When there was basically one go-to exchange and it went down. Now we have 500 exchanges. These guys lied, right? They committed fraud and they stole $9 billion. Okay, but $9 billion out of $1 trillion? I hate to say that $9 billion is not a lot of money, but it's not a lot of money. Compared to what happened in the global financial crisis, hundreds of billions, in fact, trillions of dollars vaporized, stolen, that was way worse, way worse. So we're at this interesting inflection point.
Yeah, we are, and maybe we'll just continue to have Tom Brady as a quarterback till he's 50. So that
yeah, he's got to work off his debt now,
right? I want to shift gears a little bit to regulation, because you would think, from my point of view, I'm not entrenched in the crypto space like you are. From my point of view, and from an institutional point of view, we actually we would prefer to have more regulation, because as and I'm sure most of our viewers know, that crypto and has been really interwoven into the fabrics, if you will, of Wall Street. And so more regulation is actually a good thing, not necessarily a bad thing, I would think. Well, how do you feel about
more regulation? Regulation is good. Rules are good. You and I talked about this off air. Think about the kids whose parents don't give them rules, don't give them a curfew, don't enforce any rules. They're a disaster, right? Kids need rules, right? They need boundaries. What's wrong? There's a fine line. It's like tax avoidance, tax evasion. You should do everything you can to avoid paying taxes. Totally. But when you get to the line, don't cross the line, right? We need the rules. We need to know what the rules are. If you don't know what the rules are, you can break the rules without knowing it. So part of the problem is, under Jay Clayton, the SEC actually admired them. I mean, they were prudent, consistent, and measured in their approach to regulation. They ruled Bitcoin not a security, Ethereum not a security. The rest, we're not sure yet. And we're going to take our time. That was actually the right way to do it. But they made definitive statements and then said, we're going to do more work where we're not definitive. Under the new regime, I'm not as big a fan. But Jay was really good. And the problem with regulation is regulation for the intent of providing boundaries and helping advance growth, all for it. Regulation to obfuscate growth, put in place through bribery by incumbents, I'm less for that. I'll give you a perfect example. Something called the red flag law. So turn of the century, horseless carriage gets invented, and the horse and buggy manufacturers go to the legislature in New York and bribe them to pass a law called the red flag law. And so if you paid to get a horseless carriage, you had to hire a human to walk in front with a red flag, okay, to signal that you were driving and that you wouldn't run into pedestrians and horses. Have you ever seen someone walking in front of a car with a red flag? No, because it was a dumb rule. But that was a rule. And it wasn't designed to encourage growth and make sure that more people owned automobiles. It was to keep the incumbents from having to deal with a threat. Now, at the end of the day, the technology wins. When the airplane came along, my grandfather-in-law went to work for American Airlines, and his family was horrified, right? He left this stable job at the train company to go work at this airline upstart. And the train companies passed out pamphlets saying you would die if you got on an airplane because your body would cave in on itself when you went too fast. Clearly not the case, but they spread fear, uncertainty, and doubt, and they lobbied, right, the regulators to try to restrict, the things that the airplanes could do. So regulation in response to bribery or lobbying, fancy word for bribery, or corruption, from incumbents to slow down growth, I'm not a fan of. So like this whole, Warren bill, complete ridiculousness, right? The idea that you're going to require every cold storage wallet to go through KYC AML, that's ridiculous, right? The whole point of a decentralized system is we don't need the systems of the oligarch. Now, they use the whole money laundering and terrorism. Well, here's the thing. I used to laugh, like when the government types would say, crypto's only used by terrorists and money launderers. And I'm like, no. I mean, the number one thing used for terrorism and money laundering is the US dollar, bar none. I mean, Sacco money, way more prevalent than fingers on a keyboard, because you can get caught using fingers on a keyboard. People can trace it. Now, here's the weird thing. I'm changing my tune because I didn't realize that the government actually had inside information, that they were doing some of the great money laundering. This FTX thing is a money laundering scam. It was laundering money for politicians. I mean, in an unbelievable way, sending money to foreign countries put it back at FTX. FTX sends it to Alameda. Alameda sends it to Sam Bankman-Fried. Sam writes big checks to politicians. That is, if you looked up the word money laundering, you'd see a picture that looked just like that. So I didn't realize that they were so firmly entrenched. And at the end of the day, who does more money laundering, banks or crypto? The banks have paid more fines for money laundering, for admitted money laundering, $350 billion. Okay. And remember, the fines are a percentage of the profits, which are a percentage of the actual money laundered. So we're talking trillions and trillions of dollars versus the whole market cap of crypto is $1 trillion and Bitcoin's 330 billion. So it's not close, but the idea that we want to use regulation to say, we know what's a security, what's not. We know what's property, what's not. All for that. The stuff that's meant to slow down progress, not a fan. And that, follow the money. If you find people, like, turns out the Bankman-Frieds were some of the largest donors to Ms. Warren's campaign. Shocking. I mean, shocking, right? But that's the way the world works. And until we get legitimate, like Cynthia Lummis, she actually believes in the technology. She's actually propagated legislation that is designed to help and move the ball forward. Wyoming's done a great job in that regard. And so if you think about the people who are using regulation in the right way to create growth and create innovation versus the ones that are trying to restrict innovation, at the end of the day, innovation wins. Always has. Disruption happens. And the people getting disrupted, they don't like it. And I always marvel at this. People say, oh, well, you live in North Carolina, all your jobs got offshored to China. Yep. But here's the funny thing. We have more jobs in North Carolina today, and the rest of the country, for that fact, than any time in history. Despite all the jobs that were lost to China, despite all the jobs that were lost to innovation, despite all the jobs that were lost to technology, we have more jobs today than any time in history. We find a way, right? We have businesses that didn't exist. How many people are YouTubers that didn't exist 2 decades ago? And now you ask kids, what's your goal in life? 35% say I want to be a YouTuber. Now that we got to fix that. But I'd like engineer, scientist, creator. But at the end of the day, disruption is good, technology is good, and ultimately it creates jobs for you and me because we trade in stocks, bonds, currencies, commodities. The only way stocks, bonds, currencies, and commodities exist is if there's innovation. Without innovation, there are no stocks, there are no bonds, there are no currencies, and there are no commodities. Because innovation is what drives progress. And progress is what allows countries to exist and issue currencies and fund innovation. And then we have stocks and bonds.
Great points, Mark. Well, let's shift gears away from cryptos really quick. Let's just talk about the economy because we're on the cusp of obviously a new year. Ooh. We're going into 2023. The central banks still are very restrictive, but it looks like the Fed we might be close to to at least keeping rates at this elevated level. But what's your outlook for 2023? What do you see? Do you see inflation actually coming back down to the Fed's target? At 2%? Do you think inflation is going to come back and rear its ugly head again? Do you think we're going to have a severe recession? What's your overall feeling going into 2000?
Yeah. So the number one thing is, I said in January this year that 2022 might be 2022 TOO. Unfortunately, that's kind of the way it turned out, and it's been an ugly, terrible year in every way, right? I mean, markets have been horrible, economic activity has been horrible. You know, it's been tough. Been tough on people, housing markets in shambles. And here's the thing, like the Fed and central banks around the world made what I believe was the largest policy error in history, which is saying a lot, right? Worse than the 1840s, worse than the 1930s. This was the worst post, the COVID nonsense, right? You don't lock down economies for a respiratory virus, right? We've never done that in the history of mankind. We shouldn't have done it this time, but we did. And the central banks printed the most money in the history of mankind, right? But the US has been a republic for 246 years, and half of all the dollars ever printed were created in 24 months post the lockdowns. That's ridiculous. That was a policy error. That's what caused prices to increase. We don't have inflation. Inflation is when there's excess demand and limited supply. That's not what happened. Right? My house, this house that I live in Chapel Hill, in theory, last 12 months, before the last couple of months, was up 40% year over year. Did my house grow? Did it get more efficient? No. It actually wore out. Actually, I had to put money into it to keep its value. What happened is the money got worse. They devalued the currency. That's not inflation the way we think about inflation. That is currency devaluation. Currency devaluation happens in the death throes of republics and empires. All empires fail, every single one. Roman Empire, Ottoman Empire, British Empire, Spanish Empire, every single one, French Empire. They've all ended. Right? In fact, it was funny. We were watching the World Cup this weekend, and my wife says to me, "What's France's view on immigration?" I said, "That's actually not very good." She says, "Well, how can it be? Look at that team." I'm like, well, remember, they were the second largest empire in the world, behind the British Empire. They colonized, right, a third of Africa, most of Canada and North America. It was all French. Really, I didn't remember that. So that was that. All the empires fail for the same reason. They get overly burdened by debt and they devalue their currencies. So think about the history of currencies. There have been 775 paper currencies in the history of the world. 3/4 no longer exist, right? They literally went to zero. The pound sterling, 1 pound note used to get you a pound of sterling silver. Now it takes 174 pounds to get you a pound note. So it's crazy what happened to, 74 pounds. So it's crazy what happened to the value of currencies, but that is devaluation, not inflation. So this whole thing about the inflation, it's not inflation, it's money supply. M2 went up 50%, the highest ever, and you had but in the last 12 months, we had the greatest number of central bank rate hikes in the history of the world. And it wasn't just the Fed, it was everywhere in the world. And so now money supply growth went negative for the first time in 40 years. And shockingly, if you look at M2 advanced 16 months and then look at inflation, it's a perfect like 90+% correlation, probably 98, 99% correlation. And it is going down. And we will be right back at 2-3% sometime in the middle of next year. It has nothing to do with the Fed. The Fed funds, you and I don't borrow Fed funds. The average person doesn't borrow Fed funds. Who borrows at Fed funds? Banks. Fed funds were held low, artificially low, for years, for a decade, to reliquify the banks because their balance sheets got blown up through fraud and abuse in the global financial crisis and the time leading up to the global financial crisis. So now what you've got is the situation where they've raised rates, they took liquidity back out of the system, economies are rolling over, global growth is crashing. So global growth crashing, trade crashing, that is not a scenario where you're going to see rampant inflation. What you're going to probably see is more deflation. And deflation is also exacerbated by demographics. Japanese bad demographics, Europe bad demographics, US bad demographics. Some place that has good demographics is really a place like India. Even China has kind of a weird demographic. They have 2 bulges. They have an amazing echo boom, but their boomers are aging very rapidly. But they have 330 million millennials. Just let that number sink in. That's a gigantic number, right? We have 80 million in the US and it's a big deal. They have, 4 times as many. So there are interesting demographic dynamics, but ultimately, I've been asking this the whole time. How many rate hikes are going to fix the zero COVID policy in China? Doesn't matter. They don't care. They're doing something different for a different reason. How many rate hikes are going to fix the natural price of natural gas going into Europe? Doesn't matter because Russia's got a different plan. How many rate hikes are going to fix the price of wheat in Ukraine? Doesn't matter. So all of those kind of one-off price increases are geopolitics or supply chain. They have nothing to do with monetary policy. And so we have the problem that we can't increase fiscal stimulus because we're running massive deficits and now you can't afford to cover the, service the debt because rates went up. So we can't over borrow like we did in 2020. We ran a $4 trillion deficit for a year. Ridiculous. But that was the crazy modern monetary theorist, the cult of Kelton, Stephanie Kelton and her lunatics who thought that, you can print as much money as you want and it doesn't have any impact. Well, no, it does have an impact. It devalues the rest of the currency. And that's been the case forever. If it were as easy to create wealth, in fact, in my office in the other room, I have a 100 trillion Zimbabwe dollar bill, which would not buy a loaf of bread, right? $100 trillion. So I'm a multi-trillionaire, but I couldn't buy a loaf of bread with it because the money doesn't matter, right? If you can print wealth, everyone would do it. You can't print wealth. The only thing that creates wealth is innovation. Back to the innovation and wealth creation. And so that's a long-winded way of saying, I think we're in recession, right? I don't think it's a deep recession like 08. I think it's a shallow recession like 01, back to the 00 to 02 analog. I think, you look at 01, first quarter is negative, second quarter is positive, third quarter is negative, exacerbated by 9/11. And then we had the big down market in 2022, down 20+%. Why? Well, because that down period following the lockdowns, kind of similar type of lockdowns, and then the Patriot Act and all the surveillance that happened after 9/11, then you had all fraud, right? You had Enron, WorldCom, and when you shine a spotlight on bad people doing bad things, it all bubbles to the surface and people's like, oh, geez, I didn't know that was going on. And then there's a big crackdown. So the crackdown led to that down cathartic, bear market. And I think that's what we're headed for next year. I think we haven't seen the lows. I think the Fed, people say, well, the Fed's going to pivot. It doesn't matter, right? What are they going to do to change growth? We're deglobalizing, which we know is bad for growth. We have massive debt problems and massive currency problems. And so ultimately, the only way to fix our problems is through growth. The only way to get growth is to promote innovation. The only way to promote innovation would actually be to do things like cut taxes on wealth creation and innovation. Don't tax income, tax consumption. You can encourage innovation through tax credits. And we've done a little bit of that in things like solar and wind, but how about in other places like digital assets? And so ultimately, I think the Fed will come around. They will probably be cutting rates into next year at some point. I think it'll be too late, a little bit too late, even like last time. And I think earnings are going to be really bad in the new year. I think first quarter GDP is going to be really negative. The only reason third quarter and fourth quarter were positive is we released oil from the SPR and sold it and called it net exports. That's ridiculous. That's like breaking a window, which you don't count, and then you replace the window and you count that for GDP. That's just insane, but that's the way the math works, right? A hurricane happens, the destruction doesn't count, but the rebuilding does. That's insane. So, you can't release oil from the SPR and not have it count and then sell it and say, oh, that's new GDP growth. No, it's not. We bought that oil before. We already spent the money. You're double counting. But that's the world we live in. And look, it's like stock-based compensation. If I pay you stock options, that's an expense. It shouldn't be revenue. If I'm a tech company, there's a rule that makes that revenue to me. Like, how is that revenue? That's not revenue. That's an expense. So we live in a world where things aren't always as they appear. I think that starts to collapse. John Kenneth Galbraith said it best. He said, the bezel has always existed. And what's the bezel? The bezel is the amount of money that people steal. And when times are tough, not a lot of stealing goes on. But as times get good, lots of stealing goes on. And then someone calls BS, right? Someone calls fraud. And then regulations come in and pound it down, and the bezel goes down. And then it starts back up. And so it happened in the 1840s with the Depression, then happened in the 1930s, it's happened in the 2020s. We're in this 90-year, depressionary cycle. Look, if my fear, Blake, is we made the first mistake of tightening liquidity into a slowing economy. Bad decision. If we compound that with doubling down on tariffs and weakening the currency, I think we could repeat the sins of 1931 and turn a garden variety recession into a depression. I'm not saying that's my base case, but that's my fear. Yeah. So I do worry that it's going to be tougher than people think. The Fed's not going to come to the time, and the mechanism is broken. The return generating mechanism, which is housing, is broken. Right? Housing, if you look at housing activity, it's just plummeted, right? Because you went from 3% rates, and what did people do? They didn't buy the house they thought they should buy. They bought twice what they could buy because the payment was so low. Well, now interest rates go up and your mortgage goes up $1,000 a month. Think about this. How many people in America have the capacity to handle $1,000 increase in their mortgage? Not very many, right? What is it? Over half couldn't find $500 for an emergency. We're talking $1,000 a month. So that's starting to happen as these rates reset. I just got my letter that I had a 10-year adjustable that I just totally lost track of. We literally had a flat rate, a 2% interest rate for 10 years. It's not going to be 2% anymore. Right. So, it's my fault for not paying attention. I didn't even think that it was coming due next year, but it is. So I will deal with it like everybody else, but it's a tough place to be. Global PMIs sub 50, that's recessionary. New orders worse than that, recessionary. Global trade down, Baltic freight index down. And ultimately, the only thing that could save it is the same thing that saved us after the global financial crisis, China. Global financial crisis, China printed $4 trillion. It's a lot of money, way more than Bernanke. Bernanke did not save the world, China did. And China could do it again. If China opens, if they abandon the ridiculousness of zero COVID, which I believe was intentional to create the bond with Russia and get, securing of oil supplies, then we could kind of grow our way out of this. But that's the only thing I think can save us.
All right. Well, Mark, it's always enlightening speaking with you, and I could actually sit here probably all day long and do it.
You're too kind.
But I want to ask you. I'm going to ask you this one last quick question.
Sure.
I like Bitcoin. I don't necessarily like the price action.
Yeah.
Where's your target? Where are good places? I know you'd be like, just buy it now. Close your eyes.
No. I look. I got the sign, right? Buy it, but not buy it all, right? Buy it today. Buy it next week, buy it next month. I'm a DCA guy. I buy a little bit all the time. And here's the thing. Let's just look at stocks versus Bitcoin. Stocks down 25% this year are still in the 93rd percentile expensive. They've only been this expensive 7% of the time in all of history. 140 years, only been more expensive 7% of the time. Bitcoin, on the other hand, has only been cheaper relative to its history 3% of the time. Which one would you rather buy? Right. So it could go down more. Sure, it could go down more. But the risk of it going down a lot more, pretty low. Why? Well, because the network keeps growing. And if you look at the 14 years that it's been alive, the network value, there's lots of volatility, but the network value keeps going up. And the way I'll leave you with this thought. So Amazon, right, been a public company for 26 years. In every single year, including this year, it's at a double-digit drawdown. It has the same volatility as Bitcoin, 80. Bitcoin and Amazon have the same volatility, 80. Amazon's at a double-digit drawdown every year. The average, this will blow you away, the average is 31%. So on average, every year for 26 years, you lost a third of your money. This year's down 50, okay? When was the right time to sell Amazon? That would be never. Who bought it 26 years ago and holds it today? 5 people: Jeff, mom, dad, ex-wife, and his Bill Miller. That's it. Everyone else got shaken up by the volatility. So the same thing with Bitcoin, right? If you bought it 10 years ago, great. If you bought it 5 years ago, great. If you bought it 3 years ago, great. If you buy it today, great. But don't buy it all today. Buy some today, buy some tomorrow, buy some next week, next month. And ultimately, it's not about the price. Price is a liar. Price of anything is the amount that a small amount exchanges hands, right? The price of Microsoft shares is not the price of the company, not the value of the company. That's for 100 shares traded. If you own 1 million shares, that ain't the price you're going to get. If you own 1 billion shares, you're not going to get that price. So a little bit of Bitcoin trading at whatever price doesn't matter. What matters is owning the network. I believe this is the most powerful, most valuable computing network the world has ever seen. I want to own a piece of it forever. And you can still do that, right? And you can do it in Satoshis. You don't have to buy a whole Bitcoin. You can buy a 1/100 millionth, 1 Satoshi of a Bitcoin. You can do that. You can buy 10 Satoshi. You can buy 100 Satoshi. You can buy, I think 300,000 Satoshis. So if there's, 8 billion people on the planet, 21 million Bitcoin, there's like 280,000 Satoshis per person. So the cost to acquire that today is like $50. Do that. Start there and keep accumulating.
Interesting, Mark. Well, tell us a little bit about what you guys do at Morgan Creek. I want to follow your work a little bit more.
No, so Morgan Creek Capital Management, morgancreekcap.com, CAP. We run an asset management firm, an RIA. We have products in the hedge fund space, in the venture capital, early stage venture capital space. We do some growth equity in China, a small team in Shanghai. And that business we run out here in North Carolina, but we have people all over the world. And you can go to the website and see all about that business. Morgan Creek Digital, which is our newest investment arm that we started 5 years ago, where I spend most of my time today, runs the digital asset business. Venture capital, we're on our 4th fund, getting ready to raise our 4th fund. We also run what's called a risk managed Bitcoin strategy, where we're either in Bitcoin or out. Right now we're in cash because the trend is negative. It's just a simple trend following fund. Traders love it. And just, short-term, intermediate, long-term trend is bad. Intermediate term trend is bad. Short-term trend is, bad-ish, but almost good. So we're thinking about maybe re-entering, but we've been in cash since like April. And then we do a couple other things in the digital space, but I'm at Mark Yusko on Twitter. Pretty active there, and always appreciate the chance to hang out. So I wish everybody here, happy holidays. If you're already celebrating for Hanukkah, or if you're going to celebrate this weekend or Christmas, wish everybody the best for the new year, and look forward to a exciting 2023.
Absolutely. Well, Mark, we appreciate your time as always. And I'm going to make sure I reach out to you in the coming year and circle back with you and get all caught up in the crypto space once again.
Excellent. We'll see you soon.
Happy holidays to you.
Thanks, you too.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.